Okay, we can go ahead and get started. I'd like to welcome everybody here today. My name is Tobias McFall, co-president of the Canada Chamber of Commerce in Houston. And we have a distinguished panel discussion here today that's going to be led by Doug McCullough. First, just a quick moment about the Canada Chamber of Commerce. We have an advisory board made up of a number of very quality service providers and experts in cross-border business, a veritable one-stop shopping for cross-border business needs. We have our original member, Cole International, your logistics, customs, and supply chain management company, Blake's Canadian Lawyers, who will be represented on the panel today, as well as BMO Harris Bank, who will be on the panel as well today. Dunbar Harder, immigration attorneys, Savills, help you find your location on one side of the border or the other. McCullough Sudan, who will also be represented today by Doug, your business lawyers in the US. Kingsbury Global, for your communications, business communications needs. Also Air Canada and the Consul General of Canada in Dallas and Houston. That is a great ally and supporter of the things we do. So I mentioned we've got a panel discussion today. Chris Dopp is a managing director in the middle market and M&A group at BMO Capital Markets, responsible for originating and executing M&A transactions primarily in the industrial sector. With over 20 years of experience, Chris has advised management teams, boards of directors, private equity firms, and family ownership groups on nearly all types of transactions, including sell sides, buy sides, mergers, divestitures, everyone's favorite hostile activist defense mandates. He's based in Dallas, where he lives there with his family. We also have Dan Jankovic, partner of Blake, Cassel's and Graydon LLP at the Calgary headquarters. He practices corporate income tax law and advises on domestic international tax planning matters, with a particular focus on mergers and acquisitions, corporate reorganizations, debt restructurings, resource taxation, and investments by private equity and pension funds. Dan also advises international clients looking to invest, commence, or acquire business operations in Canada, especially in the oil and gas, renewable energy, technology, infrastructure, and service industry sectors. Dan regularly presents with us and with many other organizations and writes on domestic and international income tax issues. He has given presentations at the Canadian Tax Foundation and International Fiscal Association for the Canada chapter, conferences, and at the Tax Executive Institute and Canadian Bar Association tax meetings. And then leading the panel today is our other co-president for the Canada Chamber of Commerce, Doug McCullough. Is a corporate attorney who has over 20 years of experience representing clients in corporate transactions, mergers and acquisitions, taxation, both domestically and internationally. He's a partner of corporate transactions law firm McCullough Sudan and director of the Canada Chamber of Commerce. With that, take it away, Doug.
All right. Well, thank you all for joining us. I've moderated panels on sort of M&A outlooks many times, and I went back and looked particularly at last year's notes. Dan was on our panel that we had a in-person meeting back when we could do such things, and hopefully we'll do that again soon. But we met in Dallas last year and had a panel sort of talking about the M&A outlook, and sort of the thrust of the opening questions, if you will, was a conversation about where we were in the economic cycle. It's kind of interesting to look back just where we were just about January, February last year, pre-pandemic. Things were actually pretty good economically. I think in the U.S. we had in January last year we had the lowest unemployment in decades, and the talk was, even though things were actually moving along pretty well, that the growth cycle had been so extended that the debate was, are we due for a downturn? Is it inevitable, and so forth. Well, we all know what happened about a month later. And so there's really not any question about where we are in the cycle. I think the real question is, how do we move forward? And just to kind of lay a background, I think we all kind of lived through the past year and have some sense of what happened in the big picture of the economy. But I'm going to let both Dan and Chris just kind of comment on, what did you see in the past year, just sort of because we're going to pivot to talk about what comes next. But I know M&A was down in general, and I'm imagining that with the border closures, that cross-border M&A was even more affected than just domestic mergers and acquisitions. But just briefly comment a little bit, since Chris is unmuted already. I'll let you go first. Sort of walk us through what all you saw in the past year.
Yeah, no, thank you. Look, I'd agree. Pre-pandemic was certainly a period of strong M&A performance. Really went back to 2014, where each year had strong performance, both in terms of number of deals done and deal value. You'd pointed to 3.5 unemployment, which again I think was the lowest in 50 years or something. Strong stock market performance, strong financing markets. You started to see less deals get done overall, but for greater values, and pretty limited headwinds. You had the typical uncertainty around U.S. election, presidential election, trade concerns, U.S.-China, also more locally. But yeah, I think as we entered into the pandemic in 2020 was, from an M&A perspective at least, a bit of a tale of two periods. The first half of the year, M&A activity down roughly 70% year over year, but second half up almost 50, a little over 50% year over year, so to pre-pandemic levels. So I think what we saw from our clients was really in that Q2, Q3 period, really trying to triage, if it was a private equity firm, their portfolio companies, which were going to be the winners, which were going to be the losers, trying to shore up their internal operations. That went for corporates as well. And then during that period, M&A obviously went on, took a bit of a back seat. But really then in the latter half of Q3 and into Q4, we really saw a pretty significant pickup in some of that pent-up demand. And a lot of that was just situation specific. So it really depended on what the COVID impact of the business was. Certainly some businesses were down significantly, some were up significantly if they happened to be in a sector that benefited. But maybe one of the best indicators was just neutral. I think that was a pretty strong indicator to potential M&A partners that a business that could have, all things being equal, a relatively equal neutral year in a pandemic really showed a resilience in that business. And then again, somewhat situation specific. We worked through having virtual management presentations and site visits, and that just lends itself sometimes better to different industries than others, right? So you can do a drone virtual site visits at some it's for some businesses. For others, it doesn't work as well. If you have, for example, a services business where it's really important to have people on the ground and looking through and getting a better feel for those businesses, those things that were put on hold and continue to be put on hold. So yeah, I think that's a little bit of an overview of 2020, at least as we saw from the banking side.
Yeah, and I would second what Chris is saying. I think obviously when this happened last March, when the pandemic reached our North American shores, there was clearly panic and economic activity halted, at least here in Canada. And there was quite a bit of confusion and uncertainty. But as we got to, let's say, Q3 and definitely Q4, we started to see a large uptick in deals. So while the total deal value was down in 2020 compared to 2019, at least in Canada, interestingly, by the end of Q4, the number of actual deals went up in Canada by the end of 2020 compared to 2019, which is quite interesting. And then when you look at where these deals happen and what did occur in the market, there were consolidation trends, especially in the oil and gas industry here in the West, in Alberta in particular. So we had some large transactions where companies either merged or did certain restructurings and sales of certain assets, particular assets that perhaps some other buyers were interested in. So there was consolidation happening, and I think we are going to see that in 2021 and probably 2022 as well. So consolidation was sort of topic one. Topic two that we saw by the end of last year and already are seeing this year is M&A takeovers of distressed companies. So folks that have unfortunately not been able to survive the pandemic and the shutdown of the economy. And the third thing that I would say, there will be a fourth too, but the third thing that I will say is that the companies that have survived well, or at least what we have seen as legal advisors, are the companies that really manage to embrace and exploit technology during this year, over the last 12 months. So a la the drone example, folks that were able to take advantage of technology and virtual, even this, right? Like organizations and companies that were able to quickly adapt and exploit technological developments were the ones that we saw were weathering the storm much better than those that simply were not up to date and up to speed with technological developments and exploitation of technological tools. And then the fourth thing that we are seeing as a trend, and I think that, by the way, that technological focus is going to happen this year and next year as well. I think companies that want to be healthy, viable, growing enterprises, I think are going to have to focus on technological developments and exploit those tools to grow. And the fourth point that we are seeing is a large emphasis on ESG, environmental, social, governance focus, which is interesting for us in Canada's energy hub. Likewise for you in Texas, right? But yet, even here in Alberta, Canada's energy center, if you will, you see oil and gas companies more and more focusing on ESG in order to attract investors. So be it by investing in carbon capture, hydrogen type deals, or focusing on certain social and governance norms and objectives by saying, for example, that the board of the company will be composed of members of certain gender or racial diversity or what have you, and which is quite interesting, because we hadn't seen that focus up to this point. So you're seeing that trend as well that picked up and got a lot of attention by the end of last year, and I would say this year. And all of that, I think, is expected to continue in the short, if not medium term as well.
So I want to go back to kind of what Chris was talking about, the process of sort of due diligence remotely and so forth. One of the comments you hear a lot about industry is that we're never going back to the way things were in 2019, and some things will change, and that's going to probably be my next question. But let's talk about the due diligence and just the whole deal process. Do you have a sense of, or maybe just some predictions on what aspects, the things that we learned as part of the process Do we think that we're going to be doing more of our due diligence remotely? You mentioned drones. Obviously, there's we're now doing much more of the Teams meetings, Zoom meetings than we ever would have before. How much of that do you think is going to be, a pivot, and we're going to do more of that going forward versus we're going to all rush to get back face to face and culling through documents in people's offices and so forth? Chris, what are your thoughts?
Yeah, look, I think early on that you heard a lot more of predictions how we're never going to go back to doing business how we used to, and it just seems as we get closer and closer to opening things back up, people are starting already to itch to get out there and travel and meet people in person. So, look, I think it'll be mixed. One thing that has been successful in some of our processes is, for example, having meetings with management virtually earlier on in the process of an M&A process, particularly when you're out to a broader group of people, because that at least helps you kind of self-select from both sides whether it's a good fit from buyer and seller perspective a lot more efficiently. So I think that is something certainly we would continue to see to stay as part of our processes going forward. But certainly when you get down to second rounds and you maybe only have 2-3 people back, two or three folks remaining in a process, there's just no substitute for getting together and being in person. So there will certainly be some improvements in kind of first part of processes, but I think we'll be back to similar things in the latter part. And even for business origination, I think a lot of the meetings that are catch-up meetings with folks who you have a long relationship with, maybe it no longer necessitates a flight or a trip to go see them. But I can tell you, I'm trying to win some business on Monday, and we're all getting on a plane and going there in person, right? Because it makes a difference to show that commitment. So it'll like everything else, I think it'll be mixed and it'll be situation specific.
Yeah, I would agree with Chris again. I think we had to do what we had to do, all of us, right, when the pandemic hit. So you had no option but to do virtual meetings, virtual due diligence, right? Virtual analysis. It reminds me when I was a law school student and when I was starting my first sort of job. And, at that time, the databases were all being populated online, and the older lawyers would tell you like, well, in my days, I used to go to the company's office and dig through boxes and conduct due diligence. And that was an evolution as well, right? Due diligence became possible to be conducted virtually online. And so the law firm would give you a laptop and say, here is your access, Dan, and go knock yourself out and review all of these contracts and tell us where the risks are from a legal perspective. And the bankers were doing the same things. And, we would have calls with the bankers and the lawyers, and we would say, is this a good investment, bad investment, should, take over bids or not, and what have you, right? But I think what Chris is saying and what we are seeing as well is that there's simply no substitute at some point, notwithstanding the initial ability to conduct certain due diligence or negotiations virtually online, what have you. At some point, you need face-to-face interaction. And we are finding that that's definitely the case in Canada as well. We are all, in one shape or form, in a relationship business, establishing trust with, be it on the banking side or the legal side or commercial side, whichever side. And I think you need those face-to-face interactions to establish that trust and that deeper relationship that, for some reason, it's hard to establish when you are meeting somebody for the first time over a Zoom meeting, right? If you have that existing relationship with somebody, it's definitely easier to conduct business and strike a deal and what have you, right? But if you don't have that, it's very hard, right? And so ultimately, our chairman at Blake's is basically saying, like, well, the moment you get that vaccine, you're flying to Texas, boy. So because that's just the nature of the business that we're in. Right? You need that face-to-face interaction. and likewise, just before this call, I was on a call with Chicago, and the client was saying, like, oh, it would be nice, after we've had like 18 calls over the last 2-3 months, it would be nice for you to land in Chicago and we'll take you out. And, like, you can just tell that people themselves, the clients themselves, want you to sort of get down there, or for you get up north, as the case may be, right, to be able to conduct business. And so,
it does. This is more of a statement than a question, but it does seem to me that there's at least that all the digital capabilities we have, and now sort of the broader acceptance of so much digital communication and digital relationship building, that ought to be a boon for cross-border deals as well, just because we're so accustomed to having a conversation with somebody across town via Zoom. So now if we're trying to negotiate a deal between Houston and Calgary, it's like it doesn't feel that different.
I would say, Doug, I would say technology and these virtual meetings in this new era, and there's no doubt that, again, any company, any organization moving forward will need to up their game on the technology front, right? But I would say it's a necessary, but not necessarily sufficient condition to strike a deal. Like, you must have this technology in order to conduct virtual meetings and online due diligence or what have you, but that's not necessarily going to be sufficient for you to get the deal or to reach an agreement with a party. And what I mean by that is, it's not sufficient in the sense that you may have to jump on a plane and go to Houston or go to Calgary in order to supplement that necessary technological tool that you had used up to that point to reach an agreement. Right?
You mentioned the vaccine. Here in Texas, we have at least announced that any adult can try to get the vaccine as of Monday. That doesn't mean that there's going to be shots available for you. But I mean, I think that we probably all would, generally speaking, probably all agree that that there's been a lot of uncertainty and a lot of pent up activity that we probably will see unleashed once people start to see the economy reopening and that the vaccine's been distributed. And I guess I just wanted the question I have is, when is that going to be? And I think maybe that answer is going to be a little bit different in Texas versus Canada. Either one of you, can you give us just kind of an update, if you will, on where things stand on the vaccine rollout in Canada? I know it's been slowed. Chris, I don't know if you care to comment on that since Dan spoke last,
Yeah, I mean, I can take it from the Texas perspective. As you said, I think we're going to see a significant uptick in vaccines starting on Monday when the broader population has access. But even still, there's still been quite a few people who have been vaccinated through different programs. I mean, my wife and I have been, because we had an opportunity to volunteer at something, and we were able to get one. So there's a lot of people taking advantage of that. I just had a quick look at the cases, and we're back down to kind of 7-day average levels that we hadn't seen since September and October. So clearly things are beginning to get to that stage at least on the statistic front. We're making a lot of progress, but anecdotally, just again, talking about going to visit with people, there certainly seems to be much more willingness to do that, whether that be amongst our colleagues, and we have offices opening or already open now, having businesses starting to welcome people into the buildings again. So I think that will just continue to open things up.
Yeah, we are definitely behind the United States. Personally, I have found that to be quite disappointing, but things are being rolled out. The programs are being rolled out, and it depends province by province, just like in the United States, state by state. nevertheless, I think on average, when you look at the aggregate numbers, you know, the United States is claiming that I think it is close to 115 or 120 million people that have been at least vaccinated with one dose, with one vaccine, whereas we are, you know, way lower now. Obviously, our population is, you know, 37, 38 million people. So, but we are around 5-6 million people. So in percentage terms, we are far behind. But the governments, provincial and federal, are saying, no, things are going to speed up now. And so, you know, who knows? I think the official sort of promise date, I think the United States is what, July 4th? I think the Biden administration has said by July 4th, you will declare victory against COVID-19. At least that's my understanding. For us, it's not July. I think we are saying by the end of the summer. So that to me would mean, you know, September 1st or Labor Day, if you will. So we are a few months behind. I think on average, Canada is a few months behind the United States when it comes to these vaccinations.
Yeah, I mean, I think the thing that, you know, people are certainly looking at is, you know, when are we going to start to have the ability to travel between borders more freely, right? So with that restriction in place, so, you know, we are selling a healthcare services business based in Canada, and almost all the businesses based in Canada, and that process has been on hold because, as I mentioned before, it's one where we really need in-person diligence, we really need in-person interaction to get that going, and you know, we thought about bringing management down to do that, you know, south of the border, if you will, and then there's, you know, do they really have time then to spend time after they get back and not be able to go in the office around others, which makes it difficult. So once we can get some more clarification on when the borders are going to opened up for more ability to travel freely, that'll be just a huge step.
Yeah, the issue here is that if you go abroad, including to the United States, is that when you come back, you would have to quarantine at a government identified hotel for a number of days until you get a clearance test that you are free from COVID-19. You know, yeah. So it's quite, you know, so folks are basically saying, well, why would I do that? You know, this is, you know, sort of crazy to have that, you know, additional restriction. But it is what it is. And, you know, obviously, you know, governments across the globe are making these domestic restrictions to restrict international travel. And, you know, query whether or not we can have some continental strategy as opposed to global international strategy, right? Because the business that goes across Canada in the United States, it's the largest anywhere in the world when you look at the cross-border flow of goods and capital and people. And so, you know, to me anyway, but I'm not sitting in Ottawa or Washington, you know, you would almost want to create some sort of continental approach to this. Obviously, I'm not advocating anything for Mexico at this stage. I'm just saying Canada and the United States, but that's way beyond, you know, the topic here. So I think, you know, it's going to be the fall before we can see some cross-border traffic between Canada and the United States because of this delay in Canada when it comes to these vaccines. And so I wouldn't expect any sort of significant cross-border flights and traffic or business, frankly, before September or October, unfortunately.
Yeah, let's talk about what the recovery might look like, because, you know, I think early on, very early on, back when we were being told that we were going to shelter in place for 2 weeks, and then it was another 2 weeks, we kept hearing about there was going to be this, you know, was a V-shaped recovery, whatever, you know, it's certainly not played out quite that way. what, particularly when it comes to, I mean, there's the economic side of it, but also in terms of like deal flow, deal making. What are going to be some of the obstacles, if you will? It seems to me, and I'll just throw one out, is it seems to me there's probably going to be a real valuation gap, if you will, between what sellers want and what investors are willing to pay. At least because if I were a seller, I would want to basically eliminate the numbers from 2020 to say that was an anomaly. Chris, can you talk us through some of issues like that? Tell us about, what's going to happen on the valuation front, but I mean, maybe identify some other obstacles that we're going to have to overcome as we start to recover to normal deal flow, if you will.
Yeah, I'd say a couple things. I mean, one, we saw a huge cross-border deal, obviously, earlier this week, with Canadian Pacific acquiring Kansas City Southern. It's a deal BMO advised on, but it's a $29 billion deal that had roughly $10 billion of committed bridge financing. So the bank's obviously very supportive of that transaction. So I think it's in a sense a lot easier for those types of larger deals to get done because you've got two very large, well-known public companies. You've got members of both of those organizations in both countries. All the disclosure is done from a public company perspective. So those types of deals, I think, will continue to get done and without too much disruption. When you get to more the middle or lower middle market, that's when I think, to some of your points, it becomes we still need some time. I think for the most part, we see buyers that are giving companies a pass for 2020 from a code perspective. And again, as I stated earlier, if you were kind of neutral, flat, slightly down, they're going to give you a pass there and actually view that as positive. And I don't see too much of a gap, frankly, from valuation right now. And I think a lot of that is just due to pent-up demand from the buy side, where you've got however hundreds of billions of dollars been raised in the SPAC market. You had private equity with several quarters now putting money to work, who already went into kind of pre-pandemic levels, having significant dry powder. I talked to a VDR provider a couple of weeks ago, and he told me that their backlog was 25% greater than it was pre-pandemic. So there's certainly a huge pipeline of transactions that are ready to go. And I think particularly as the U.S. starts to debate potentially significant tax policy change, sellers are saying, okay, maybe I'll take half a turn less from a multiple perspective to get out in front of what may be pretty significant corporate tax rates going up to whatever it ends up being, 28%, and a potential doubling of cap gains taxes that has people concerned.
Yeah, I would agree. I think on the valuation front, from what we have seen on a number of deals that we've worked on, is that people are not fussed by valuation issues for 2020. I think it is seen as an anomaly, and the CP Kansas rail deal that was just mentioned, I think, is a good example of that. And we are internally here working on two other very significant cross-border deals, which of course are sensitive at this point, but you're clearly not seeing any concern on the valuation point when it comes to that. And like Chris said, I think the lower mid-level market, if you will, interestingly, again, what Chris said is likewise being played out here, where sellers are saying, smaller sellers are saying, well, if my taxes are going to go up as part of the recovery, in order to pay for, in your case, $1.9 trillion bailout package, much significant, obviously, in Canada, but nevertheless, taxes are expected to go up in one way, shape, or form. And the sellers are saying, well, I might as well sell it now and avoid the extra 5 to 10% increase in taxes, depending on who you ask, and then just be done with it. So you're seeing taxation rates playing a role for some of the smaller deals. The larger ones are focusing again on consolidation and just big picture strategy. The smaller ones, I think, are not so much focused on that. But the larger deals, I think you're going to see no matter what COVID did in 2020.
So Chris mentioned SPACs. There's a bit of a frenzy with SPACs. I'm going to ask Chris to, in case there's anyone who doesn't have a background on what a SPAC is, would you tell us what a SPAC is? Explain why there's sort of a little bit of a frenzy going on, and then really and that's sort of to tee up the question of, is there a cross-border angle to SPACs? Are we seeing SPACs invest in Canadian companies? Is there a similar craze going on in Canada? But Chris, what is a SPAC?
Yeah, I mean, just briefly, SPAC is a blind pool of capital in a publicly traded entity that is yet to make its investment. So when that company goes public, they've got typically a period of 2 years, maybe it's a bit longer, with which to make an investment. At that time, the shareholders of the SPAC have the ability to approve that investment or ask for their money back if they don't make that investment over that period of time. They also have the redemption of their cash. So it is seen as an attractive way, and the economics to the SPAC management team and promoters are pretty attractive. And what we've seen also is the ability to have that pool of capital that's raised upon IPO of the SPAC, if you will, but then also raise significantly more once you do a transaction. And they've performed quite well. They've kind of come back in the past couple of weeks relative to the broader market. But again, it's somewhat of what I spoke about before, of just a pent up demand, right? I mean, you've got a ticking clock, like you do at a PE shop, where you have to put the money to work to get these transactions done. Which is leading to pretty attractive valuations for sellers, just because of the demand for product and to get deals done. I mean, you're not going to get your healthy and meaty SPAC economics if you don't put that money to work.
Yeah, I mean, we are definitely hearing about them. They have, there have been a few, not many, but a few investments made by US SPACs in Canada. And there are some very detailed cross-border, obviously, tax issues that drive the analysis, whether or not you have a US SPAC that gets incorporated in the US and then makes an acquisition in Canadian target, or do you get a Canadian SPAC set up to make that acquisition of the Canadian target? But we don't have to get into those details at this point. But they are, it's definitely something that is on the horizon and on the picture. And I was on a call with a US law firm in New York the other day, and they were raising some of these cross-border tax issues because they have a client who's interested to use a US SPAC to make an acquisition of a Canadian target. So it's definitely on the horizon. I personally don't see myself what the big hype is. It could be just, it sounds like it's a new thing, a SPAC, but it is out there, right? Like, they are being formed to make these acquisitions. And people are, I guess, trusting management of the SPAC to then go identify a target and go make money in the specified time frame. I take it it's about 2 years or so. Yeah. That the SPAC would then have to make some profit here. And so, you know, it's an attractive option, but I don't know personally what the difference there is versus if we set up some other entity with a clear objective, you know, and I don't know why an existing company, American company, cannot make such an acquisition either. But that's, you know, I'm just musing at this point. But there are definitely, they're definitely out there. They're definitely being pitched as the latest and greatest trend. How long this lasts, I cannot sort of tell you, but
this is merely anecdotal, but my 19-year-old son is becoming sort of an amateur day trader, and he's getting all excited telling me about various SPACs and what they're investing in. Like, okay, so I see where the SPAC frenzy is coming from. Is it's young day traders that are hearing about it on Reddit and various places. Not entirely. Yeah. I'm not saying that's the whole story.
But, you know, just Doug, what we are seeing more is what I was saying earlier, is this emphasis on ESG. And I could see, for example, like, you know, I was talking to our chairman the other day, and he's saying like, oh, you know, we have this deal with an ESG bond. And I'm like, what? You know, but folks, that, you know, there's a variety of folks out there that have a variety of political views or whatever views. So there are investors out there that are willing to put their money into a company that meets certain ESG standards. Likewise, they're willing to loan money to such a company, and apparently bonds are being issued based on that company, you know, getting some certification or rating by BMO or somebody else that this company is an ESG qualified or certified or whatever. And so you see those kinds of things. And so, you know, and likewise, I suppose if you're a SPAC, you can say, you know, all of us on this call can form this SPAC and say, well, we are going to make investments only in certain areas, only if the target meets certain, let's say, for example, ESG targets. So you could see that kind of a shift, and maybe also with just younger investors, right? Like who are more focused on these trends than perhaps me or somebody else on this call. So I do think there's this sort of almost sort of like social / political shift when it comes to investments that perhaps my father would say, what is wrong with these people? You know, you know, so, but I think there is something there. I'm not in the field the way Chris is or BMO is to sort of, you know, pinpoint precisely what's happening. But I do think there's some trend happening here. And maybe your son, Doug, is better positioned to explain it, what's happening with the younger investors and what they care about when they make these investments. You know?
Yeah, I think, you know, some of the attraction is the ability to invest alongside what's, you know, often referred to, right, as the smart money. So, you know, for people who don't have the financial wherewithal to be an LP in a well-known private equity firm, this is your chance to kind of invest alongside them and hopefully get outsized returns that has people, you know, excited about it. And you know, Dan's point on ESG is certainly one we see as well. I mean, I won't mention the industry or the company, but anecdotally, we were selling a business, and you know, I heard from multiple potential buyers, I love this investment, I would do it, but I wouldn't get 2 minutes into my investment committee before they said, we just can't do this. From an ESG perspective, we are not going to make this investment. You know, our LPs will be calling us as soon as it hits the wire and complaining. So it is become a big driver of how capital flows, no question.
Yeah. I'm just looking at the Zoom group chat, and there's a question here. Is the M&A activity in Texas focused on a certain sector, or is it across all sectors? And then the other question is, with the Canadian dollar being at a discount, is the activity two-way, or is it more Texas companies investing in Canada? So maybe I'll take the second question first here for a second. Yes, the Canadian dollar being at a discount has always been a factor. and we have definitely seen Texan companies making an acquisition of a Canadian target because they get an automatic 20% discount, let's say, if you know it's if that's the exchange rate at a particular day. So you know, and these are not bad investments because you know you can make an acquisition of a company in, let's say, Idaho or North Dakota, or you can cross the border into Canada and make a very good investment with a very capable Canadian company. But because of the dollar, you get a discount, automatic discount that you may have to fight very hard if you're buying a company in North Dakota, for example, right? So you do see some of those deals. But on the other hand, it's not just Texas coming north, it's also Canada going south, notwithstanding the dollar. So the dollar does play a factor, but not always. And we were just on a deal where a Canadian purchaser company wanted to buy this Texan company that really went down in stock after your freakish winter storm. You know, so you see companies, Canadian companies, sort of looking at the map of the continent and saying like, well, you know, is there a particular opportunity for me here? And unfortunately, this Canadian company exploited the unfortunate, you know, freakish storm that you had, and the stock of this company based in Texas went down, and they took it, right? So it's a variety of factors that people are looking at in order to make these acquisitions. But the dollar is definitely one of the factors as well.
The other thing I'd add to that, Dan, is you know we've seen instances where Canadian public companies are trading at much richer multiples than sometimes their U.S. peers. So the ability for the Canadian company, notwithstanding the exchange rate, to use a currency that's trading at a higher multiple is attractive. So sometimes that can kind of be a wash as far as their ability to do particularly relative value transaction. As far as the question on you know, Texas economy and his M&A around oil and gas, certainly that is you know a big part of the M&A landscape in Texas, but you know, increasingly you're seeing a lot more diversified economy in Texas. So you know, if you think about the industrial market, the healthcare market, a burgeoning technology market, it is a big expansion that is going on. So you know, I think there was a time when it was probably appropriate to say that oil and gas and energy dominated. But I think those days are largely behind Texas. You're also seeing a pretty big renewables play, you know, outside of just traditional oil and gas from an energy perspective. So, you know, as the state continues to grow, you know, pretty aggressively, I think you will continue to see that in a way that's pretty business friendly. You know, I think you'll continue to see some of the diversification in the industries that are based here in Texas.
For sure. And we are, again, I would say, just like with the vaccine, we are a little bit behind, at least in Alberta, when it comes to this diversification push. But it is happening. And I just love what Texas has done over the last, you folks may disagree, but when I would go down and, you know, when we would meet, and you see not just the oil and gas industry, which of course is a healthy branch of your economy, but you also see the health industry and the tech industry, right? I think it's just great how you have managed to do that. We are now sort of doing this, and you know, we are meeting with certain officials here to sort of propose certain changes and amendments, legislative and et cetera. To try to drum up that diversification from. But you are definitely seeing, especially in the tech space, you know, Canadian tech companies going down, or Texas companies coming up to take control over a Canadian tech company, for example. We are seeing a lot of that software, IP, AI type consolidation, cross-border takeover activity in those things, not in the healthcare sphere, but that's because of how Canada has chosen to conduct its healthcare system, because it's public, I mean, right? So you wouldn't have that private takeover of certain healthcare companies, but definitely in the tech space for sure.
So
And to me, that's great. That's definitely one industry where cross-border, should be there. Cross-border activity in the tech space should be there, and that's obviously an industry that you can conduct your work anywhere remotely, right? Like, so that's an industry that's really well suited for cross-border activities.
So as a quick final question, and it's probably unfair to ask this and ask for a quick response. Our last panel that we just recently did was on what the Biden administration means for trade. And I think that there was, generally speaking, sort of a cautiously optimistic view that the relationship between Canada and the United States is going to be on a little better footing. And this means that we're probably going to see a little bit more trade, generally speaking. Does it make a difference on deal making? Do we expect that if there's more trade between companies in the U.S., companies, consumers in the U.S. and Canada, that from that you'll see more deal flow? Do you think it's going to have much of an impact? I'll let Chris go first.
Maybe on the periphery, but I just don't see it as a major driver of deal activity. I think there's so many other factors that come to the fore that are super attractive in both markets that people look at. That they'll pay attention to what's going on the trade front, but even at its worst, it didn't seem to really get in the way so much of, certainly there'll be certain industries that are affected more than others, but I don't see it as a huge driver.
Yeah, I would agree again. I think if you're TransCanada, for example, with Keystone XL, that's one specific industry where you may say to yourself, you know what, I'm not going to make some investments in the United States for the time being until there's a change in administration. I'm just speculating on behalf of TransCanada, what TransCanada might be thinking, but you could see that sort of line of thought. But just like Chris said, I think for the rest of the generic sort of business community, I think they're looking at things such as rates of taxation, who's going to be taxing me more? Do I incorporate in Canada? Do I incorporate it in the US? Do I just buy the assets? And those are way more strategic, business-driven decisions than who is sitting in Ottawa or Washington, in my view. And I think when you look at the trade growth since NAFTA, the original NAFTA was put in place, you see year after year increased cross-border activity and trade flows and cash flows, which is very good to see, right? For somebody like me who's not focused just on one country, but wants to sort of look at more internationally, that's a great trend. And obviously, trade has grown over the decades, notwithstanding that we've had changes in administration in Washington or change in government in Canada, right? So people are clearly looking at factors that go beyond who is sitting in the White House. Again, unless you're TransCanada. Calm down a little bit.
Very good. Well, we appreciate that. And Chris, it's been a fantastic panel presentation. Once again, and I want to thank a special plug to Victoria Mueller, who behind the scenes here at Weinstein Spira has been helping us get these Zooms set up in an orderly fashion. And I'd like to take a second to plug a date to be determined, but our next event, which will most likely be a tech destinations in a business world, trademark pending on that name. where we're going to be highlighting some different places. To Dan's point, where he talked about how some of the beyond energy, even in the energy space, some of the tech to fintech stuff has been not, if not less impacted, even more vibrant, currently and going forward. So thank you to the panel. Thank you, Doug, for moderating today. Appreciate everyone.
Well, and hopefully we will have this at some point live in person. That's the sign off.
Absolutely, yeah.
Not that I'm not in favor online, but I am more in favor of in-person get-togethers.
Certainly, yeah. So the cat's out of the bag, and to Dan's point, all the stuff we're doing online is building towards us being back together later on this year, cocktails in hand, and so on.
And handshakes.
Yes, handshakes and cocktails, absolutely. Thank you, Dan, for pointing that out, for sure. All right, thank you, everybody. Have a good afternoon.
Thanks for organizing. Okay, bye-bye.
Thank you.
Bye, everybody.